Kitco Mining's special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the Rural Symposium in Boca Raton, Florida. Today we're talking about junior exploration, and I have great pleasure to be joined by Craig Parry, co-founder and partner of Inventa Capital. Craig, welcome to Kitco.
Thanks, Paul.
Craig, let's start off. Who is Inventa Capital? What are you and what do you do?
Look, we are essentially a merchant bank. We're an incubator. We're initially sort of driven by opportunities we saw in the mining space, in the junior mining space particularly. We love exploration, we love development, so we're on the hunt for projects. But we've very much gone towards the battery metals in recent times. So we've got a number of companies. I think 12 of them are listed. We've got over 20 companies in total, all focused on battery metals in the clean energy space predominantly.
Okay, so in terms of how you've put the portfolio together, obviously the critical metals have a bright future ahead of them, so it makes a lot of sense that you're loading up on those. But how have you put the portfolio together? How do you structure it? How do you manage the portfolio?
Yeah, look, one of the tough things about our business is that when you don't have a big platform, you're not a major company, you tend to be a little bit early on, a little bit opportunity driven. So you sort of, the opportunities you see drive your strategy to some extent, but as you get a bit bigger like we are now, we can focus more on things that we see real strategic import to, the metals and projects, quality of projects that have real merit. So that's what we've gone about doing. We typically, I've got 4 partners there. My primary partner is a guy called Mike Connett. Mike and I have been doing business for the past 5 or 6 years together. He's also the CEO of one of our portfolio companies, Vizsla Silver. We've got a very good team that cover all of the silos that you need to in our business. There's things that we don't talk about. Of course, you need a very good technical team, good geologists, mining engineers and the like. And we cover that very well. We've also got very good back office people, good financial team, accounting team, company secretarial, and then the IR team, and they're all with us here today down here in Boca Raton.
Okay, thank you. What specific critical metals are you most interested in?
Look, we're very, very passionate about copper. We think, copper's, it's so crucial. It's the glue that holds everything together. And of course, it's a very big market. And there are, you can find copper projects around the world. And look, I've got a very strong view that we're going to see incredibly high copper prices in the next few years. I think I won't be surprised if we see $20 a pound copper. So that's important. Love nickel. Lithium, of course, is important. An interesting one for us, is silver. We've got one of the biggest silver discoveries in the past 50 years in Vizsla Silver. And again, silver's very important as a commodity. Gold's a little bit different. We still love gold, and we've got a number of gold companies and gold projects around the world. And that fits within the thesis, but a little bit different. It's not so much a commodity as it is, a store of value.
Okay, thank you. I'm very bullish on copper. I quite see $6 and $7 a pound. So $20 a pound is very, very bullish indeed. Let's talk a little bit more about the precious metals. You mentioned Vizsla Silver. You mentioned you've got various companies in the gold space. What is your view on how the gold sector and the gold equities in particular has evolved in recent years?
Yeah, so what we're seeing there, I suppose we're seeing very, very good gold prices, strong gold prices, strong silver prices. I think, Paul, if you'd have told me that we'd be sitting here with gold hovering around $2,000 an ounce and silver at $25 an ounce, and we weren't rolling in cash and the investors' money was flowing in, I'd be shocked. But here we are, there's still sort of fairly weak sentiment for our sector just at the moment. So I think that plays out over the next couple of years. I wouldn't be surprised, I guess, with all of the macro situation at the moment, still high inflation, although high inflation looks like it's coming under control, particularly here in the US. We're going to see stronger gold prices in the not too distant future. So very bullish on the gold price. I think silver, as a commodity, that's an interesting market. Gold's a little bit different in that, it's a very deep market and it's hard. Supply and demand dynamics are a little bit unique in the gold market. For a commodity like silver that gets used, 50% of silver is used for industrial purposes. That's an interesting one to me. You're seeing, I think the market today is in about 15 to 20% of undersupply. Now, you don't see that too often in a precious metals market. And as Rick, well, of course, we're at Rick Rule's conference here, and Rick's a super bull on silver. And Rick always talks about the fact that silver outperforms when you do get a market. So I think we're about to see that sort of dynamic over the next year or two. And even in the shorter term, we may see very, very strong silver prices. But, strong metal prices generally at the moment aren't translating to strong equity prices. This is the disturbing thing for me. There's a complete disconnect. I think that will rectify itself. We're starting to see, my partner Mike Connett, he's based himself in New York for all of June. And what he found down there is that there are a lot of generalists starting to warm up again to the sector. So, and it's when that, I like to say that it's a bit of a sort of circular affair here, investment in our sector at the moment. It's we, us and friends, all the guys that we know that have been in the sector long-term, investors and the like. That's where our money, our pool of capital is. So it's a pretty shallow pool of capital. You've got to see that generalist money come in, and I guess we're at the earliest sort of stages of the serious generalist money coming in. So, and I think we're on the verge of what will be the biggest resource boom in history because of these battery electrification of the planet dynamics.
Thank you. Why do you think there has been, or there is, that disconnect between the precious metals prices and the equities? And what do you think it will take for the equities to snap back in line and run with the gold bull?
It's a great question, and you can go into great depth on it. I think, though, that I worry that the market is very sceptical of what our industry and what we're doing. I don't think that's the case. I think, if you look at ESG investment funds, they were sort of de rigueur, very popular here a year or two ago, but they're starting to wane. People are major funds are investing back into oil and gas and even coal. And if you look at Teck, I heard the other day that Teck's coal business has had over $30 billion of investor interest into their coal business. So we know that these sort of dynamics that see investment in our sector wane, when people start making money in the sector again, they'll come back in a big way. And you're seeing that in coal now. And I think, so I don't think that's an issue. I think people will warm to mining investment again. But really, if you look at, going back to the bigger pool, deeper pools of capital, generalist funds and the like, they don't have any PMs. Every major fund, generalist fund that had a PM investing in the resource sector, going back during the last boom that sort of ended around 2013, they got rid of all those guys. That skill set was lost. So now these people, these big funds, have got to train people up or find advisors that can advise them to come back into the sector. So it's a fairly long process. So I suppose we've seen metal prices performing very strongly in the past 12 months, but those generalist funds don't have the wherewithal just at the moment to come in a major way. I think they've got our sector on a watching brief, and we should see serious influx of money in the not too distant future.
It sounds like some of them are waiting for some more excitement to come into the sector so they can perhaps show to their principals that this is something that they need to invest in, that there's potential for gains there. Obviously, in the junior space, a key trigger for that is mergers and acquisitions. Somebody gets taken out for a nice premium, generates a lot of excitement, a lot of greed maybe. But although the conditions have been there, we haven't really seen a lot of transactions. We haven't seen a lot of big companies buying smaller companies. Why do you think that is?
Yeah, that's an interesting situation because, of course, the other thing that would help us massively is a major new discovery, a Voisey's Bay type discovery. I guess they are out there. Philo's made some big discoveries, NGX, the Lundin fellas are doing well. So a big discovery would help bring eyeballs back to the sector. And you've seen a very strong lithium market in recent times. There's a lot of money there as well. M&A, an interesting situation. I think, if you go back to the last cycle, I'm a geologist by trade. I worked for Rio Tinto. In 2002, Rio Tinto moved me to Chile. I spent a couple of years in Chile and then a couple of years working in China. But my wife at the time, she worked for Western Mining. And Western Mining was taken out by BHP in a hotly contested bidding war around 2005. And that really was sort of there was a trickle of serious large M&A deals done at that time. Not too much going on in the junior sector. And then that really kicked off that last boom. And we're seeing that to some extent at the moment. Whilst you're not seeing too many juniors taken out just at the moment, You're seeing some of the bigger guys, so the Teck situation with Glencore. You've seen Copper Mountain in Canada taken out. A number of others, and of course the big one is Newmont and Newcrest, the merger or the takeout of Newcrest. So there's big deals happening, and that very much it feels like 2005, 2006 to me, and that was all a sort of a front runner to the serious boom that came from 2007 onwards. So I think we're starting to see that. I think, that sets us up very well for companies that have quality projects that we'll see that sort of more junior mid-tier M&A cycle kick off in the next couple of years. At least I hope so.
Okay, so these mega mergers are sort of the prelude of what's to come, and that will be companies buying the smaller companies. Now, as an investor that's overseeing or got your fingers in various other companies, M&A is all well and good, but at current depressed share prices, you get a 50% premium, you're still going to be underwater. Is there a case that the juniors are too cheap for M&A to happen now? Yeah,
that's a really good point, really good question. I think, from a personal perspective, we've got a number of companies that, Vizsla Silver is a good example. We've got a $300 million market cap. We've taken that from, $2 million to $300 million in the past few years. We've got one of the biggest silver discoveries in history. It's an entire district. I think there'll be billions of ounces of silver discovered there over the next 5 or 10 years. We're currently doing PEA, doing economic studies that suggest that this thing will be worth billions of dollars. So there's no way at a $300 million market cap that we'd love it. It'd be horrible for our shareholders to see that taken out at anything less than a few $1 billion type of thing over the next couple of years. So it's a good point. I think we're reluctant. We've got another company, for example, called Gold Bull Resources. We bought the Sandman project off Newmont. Fabulous economics, sort of a $100 million MPV on that project based on the studies we've done so far. The thing's got a market cap of $6 million. Now, every man and his dog with a project in Nevada's coming through the door wanting to snaffle it cheaply. I get that, but there's no way that we'd want to sell that too cheaply just at the moment. So that sets us up, and that's one of the things that I've sort of become, trying to understand a little bit better myself. If you look at Western Australia, the Aussie market is much more buoyant than the Canadian market at the moment. And we think part of that is because, when you've got a quality project in Australia, those Aussie companies will build the mine, they'll build the project. Now in Canada, so many of our friends and competitors have the objective of just selling the project rather than building the project. And I think that puts a lid on the valuation of some of these things. So we're very much focused at Inventa Capital and advancing our projects through studies and on into development. We want to be miners on anything we do, and I think that will make a difference as well. And you advance projects through those studies and make them much more attractive to potential acquirers as well. So there's a path there that we're heading on that I think is the right path.
Okay, thank you. Let's continue on the theme of valuation. I've never met a junior that says they're fully valued. Everybody says they're undervalued. But at the end of the day, your value is what the market tells you are. One of the primary functions of the market is price discovery, after all. So that begs the question: do CEOs is their reference point wrong? A lot of CEOs, I imagine, are looking back to the last bull cycle, let's say 2010. A lot of companies say the GDX is still, despite $2,000 gold, the GDX is still well down on the highs it experienced at that moment in time. Is that the wrong reference point for companies to have in terms of how they think of their valuations?
Look, I think for quality companies, I think these valuations we're seeing at the moment are almost unique. An extraordinary buying opportunity. So many investors have thrown the baby out with the bathwater. I think that we have, it has to be a quality project, because one of the things we're plagued by in Canada is that there is a lot of dross out there. There's a lot of poor quality projects, poorly managed companies, paper pusher type people behind some of those companies. So you've always got that sort of doubt. But if you've got a quality project at the moment, as I say, Vizsla Silver, $300 million, sort of talking my own book a little bit, but dramatically undervalued to my mind. Particularly if you care, you compare what we've got there to something, in recent time, well, in the last 20 years. Palmarejo is a good example. Bolognese Gold, that got bought out for, I think it was $1.7 billion. Similar sort of scale and quality of project I think we've got there. And we've got a $300 million market cap. So I think, me personally, I've deployed over $1 million into the market in the past 6 months. Because I've never seen such a strong buying opportunity. You've got high metal prices, quality projects. You've got some of those challenges of advancing a project through permitting, but they're manageable. I think this is when we make our money, buying now.
Thank you. I want to sort of touch on your comment about Canada and some of the projects there. See, Canada's got the flow-through financing mechanism.
Yes, thankfully.
Does that distort things and enable companies to raise money that perhaps in other circumstances they wouldn't be able to raise or shouldn't be able to raise?
Well, look, it's a good question, perhaps to some extent. But, the flow-through investors we talk to, guys like Jason Mayer and Dave Donato at Sprott, they will only put money into quality projects. They're not... they're still fundamental investors in quality. So, and that's one of the things that I suppose this market's flushing out, is that it's only the quality projects that are getting funded and people who will, steward investors' capital well. I think, a lot of... So it's become very hard for people who aren't genuine about what they're doing and what their projects are. So, this is... it's a bit of a war of attrition. It's a filtering process. These sort of lean markets filter out a lot of the rubbish out there. So it's not the worst thing in the world. It's not great to live through. You'd rather have easier access to capital. I'm thankful that, because of the successes we've had in the past, we've got a good following and good access to capital. I think we've raised... in the past month, we've done 4 financings and raised a little over $20 million for those companies. Vizsla Copper's a good example. We raised $6 million for Vizsla Copper. $4 million of that was flow through. So we're not suffering like a lot of our competitors are, but not the worst thing in the world to have this sort of filtering process going on with difficult access to capital.
Okay, thank you. Well, let's look ahead to sort of hopefully brighter days to come. Obviously, the $64,000 question is, when is that going to happen? Labor Day is often cited as a moment of change. People come back from the summer break, roll up the sleeves, get back to work again. What's your view on when we may potentially see a turnaround?
Oh, I don't think it's ever going to happen, is it? No. It's an interesting one. I think that... the last couple of years, I've been very positive about the sort of back end of summer. Of course, there's a lot of uncertainty in the world. You've got wars and uncertainty around metal prices and inflation and some of these things. So investors are relatively scared at the moment, cautious at least. And I suppose the last 2 summers, you've seen that very strong sell in May and go away type effect kick in. I don't think we're in a bear market for metals and mining equities at the moment. Really, it's just that no one's deploying capital. No one wants to buy. Everyone's sort of sitting on their hands at the moment. So we need a catalyst. This sort of the past few months that lead up to summer, we've seen some serious, downing of tools. People are a bit burnt out in the sector. Investors, I know, it's been hard to find institutional investors to talk to in the past couple of weeks. Everyone's on holidays. But more than ever, we talk to some very big investors, and Peter Brown's a good friend of mine. I was talking to Peter on Sunday, and he's a very good, he's a bit of a savant when it comes to markets. He's been in the market for 60 plus years. Anyway, he's saying, and what we're seeing is that there are a lot of, people are turning very, very bullish around the end of August. So I think this August should be really interesting. We've got strong metal prices, some good projects and discoveries out there. M&A starting. Watch what happens. I think you want to start deploying your capital in the next couple of weeks, because I think we'll finally see a real swing back to investment in the sector come the end of summer, and you want to be in the market longer term then, because I think some of these supply-demand dynamics for metal, particularly copper, will start to really kick off back end of this year and into early next year. And this is where I'm most bullish. I think given the supply-demand dynamics, we're about to see the biggest boom in metals in history. Of course, the last big boom was driven by a largely localised factor, a very big factor, the urbanisation of China. This is about the electrification of the planet. Metal demand is going to increase very, very dramatically. So, this is going to be the place to be for the next 5 to 10 years in the mining sector.
Thank you. I guess one of the messages there is if you don't play, you can't win. So you need to be positioned, even if it's going to be a bit of short-term pay. Okay, let's end on a high note. What are going to be some of the key catalysts for the Inventa or Inventa Group companies over the next 6 to 12 months?
Yeah, absolutely. Well, we need that macro picture to improve. We need metal prices to continue their upward trend, and I think we'll see that. But, we've got some fantastic companies. Vizsla Copper, we've got 2 rigs turning at the moment on our Woodjam project in central BC, drilling in and around some former high-grade hits, so look out for drill results coming over the next 2 to 3 months there. Vizsla Silver, we've got a resource upgrade coming and working on a PEA there for some time next year. I think those numbers will stagger the market when they come out, so look out for that. If you love silver, that's the company to be in. We've got a couple of other companies there. Tin One, we're expecting a major tin boom over the next couple of years. There's not many places to deploy capital there, so look out for that. Gold, one of the things that I'm very excited about is the lithium space. We've got a company called Targa Exploration. I think we've got some of the most prospective lithium ground on the planet over in Quebec, Saskatchewan, Manitoba. So look out for that one as we get to exploring those properties as well. And then look at for some of the other companies, other activities we've got going on. inventacapital.ca. We've got some fabulous projects. I've got one of the things I've been involved in, I think 5 world-class discoveries now. But I like to say the best discoveries I've made are our people. Mike Connett, my business partner, one of the most brilliant minds in our industry. He's going to be a future superstar of this industry. And Mike and I are backed by a seriously brilliant technical team. And I know if there's any metal on our properties, they'll find it. So, we're in really good shape.
Excellent. Look, I look forward to hearing more about that. Craig Parry, thank you very much for joining us today.
Thanks, Paul.
Stay tuned to Kitco Mining for more from the Rural Symposium from Boca Raton in Florida.
Kitco Mining special coverage of the Rural Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.